Trump and his tariffs. Will he? Won't he? But if he does, what does it mean for the trade, the markets, and the investors? We tackle that, plus share some confirming thematic signals as well. All that on this episode of Cocktail Investing.
All right. There is so much going on over this last week, whether it's trade tariffs, whether it's the continued fallout of Jerome Powell and his Fed testimony, or perhaps even something that's going on with, dare I say it, North Korea. Total, a lot of stuff for this past week in the market. So that just means, folks, once again, it is time for Cocktail Investing, where we look to distill all the everyday noise into clear investing signals. I'm Chris Versace, Tematica's Chief Investment Officer, and joining me, as always, from some mysterious location in the world, is Lenore Hawkins, Tematica's Chief Macro Strategist. Lenore, you know, I always love finding out where you are at the last minute. I term you Carmen Sandiego of Tematica Research. So where, pray tell, are you today?
Yes, today I am in Dublin, Ireland, and I apologize if the sound gets a little funky during this podcast, as I am in a hotel, and as we all know, you just don't really know. And thank God, by the way, that I'm here this week, because I was supposed to be here last week. And as I was checking in, I ended up canceling it because of the weather. They had this like massive storm here. It was like, I mean, the biggest blizzard in Ireland's history. And when I checked in, they told me that was it Thursday night? The employees couldn't even leave.
Well, you know, I mean,
but I was saying, like, if you're gonna be stuck at work, a hotel's not so bad. They have a great pub.
That's probably true.
You've got a bed. What do you need?
Yeah, they've got bed, they've got food, they got workout equipment. I mean, come on, right?
Go hit the pub for a few pints. And you're all good.
Yeah. I mean, look. As long as you get what's the expression? 3 squares a day, 3 square meals. You're okay.
Exactly. You're all set.
So, but it's it was crazy here too on the Northeast, because there was another nor'easter that came through, lost power for a little while, and as I look at the forecast ahead, there is more snow in the forecast. It's crazy, unbelievable.
Yeah. What is it? We're having winter in spring.
Yeah, I don't want to get off on a little rant here, but when I see this, I'm like, where is Al Gore? Where is this guy? I want to slap him around a little bit. Unbelievable. But I know we've got a lot to tackle. The whole issue of tariffs, like we kind of alluded to in the open, and some other things. There's a lot going on. We want to do a deep dive. So let me get this housekeeping stuff out of the way, and we'll just roll right to it. What do you say?
All right.
All right. So on the housekeeping front, folks, this is where I ask you guys always to go to tematicaresearch.com. You can check out all the writings that we have there. Some of them we'll actually be referring to today, whether it's Lenore's weekly wrap or some other pieces that we've put out already this week. You can go like the podcast, check out what we're saying on Twitter, all that good stuff. And as always, if you are more interested in the podcast, head over to iTunes. You can get them all there if you want, and feel free to leave us some constructive criticism, a positive review, all that good stuff. We love it. So, Lenore, with that gobbledygook out of the way, the last few weeks, I was just thinking about this, getting ready for the podcast. Over the last few weeks, it seems that there's always been one thing in particular that's been driving the markets, right? So, a couple of weeks ago, it was the January employment report. Then inflation concerns, then the Fed, what will they do? Then Jerome Powell's testimony before Congress last week. And then towards the end of last week, Trump and his proposed tariffs. And, I know we're going to talk quite a bit about that and how we are looking at that, the impacts of it through our thematic lens. But man, it's been unreal. Like, we can't catch a break, man.
Yeah, well, we talked about that in 2017, that there was such low volatility, not much going on. It was really just smooth and steady, and we're paying for that now.
Oh, I know. It is unbelievable. I mean, it's, to me, all of those speak to the one thing that the stock market hates, which is uncertainty. And it's just, I know that this is, we got so, I don't want to say catatonic in the end of 2016, 2017, but this is certainly a very different environment, and we're seeing wider swings than we've seen in some time. It's just, we'll see. And I think we're seeing
a real rise in uncertainty. I think that's what happened last week is very nerve-wracking, I think, for businesses and for the market. because no one's really sure what exactly is going to be driving fiscal policies, because this tariff issue, it affects about 90% of our allies, and yet Trump is saying that it's a national security issue. So that's kind of complicated. I mean, when you look at it, Canada is the top exporter of steel to the U.S., and that's, I mean, they're hardly a national security issue.
Right.
China, which we've been told is, his kind of arch nemesis, is actually number 10 on the list, right?
Arch,
And
did you just say arch
arch nemesis,
nemesis?
yeah, China. He doesn't like China. But even if we look at Canada, who's the top exporter to the U.S., we actually export back to Canada about 2 billion more than we import. So it's very confusing to try and understand how exactly this is going to be good. And it's a bit more of that driving with the brakes on, right? Because we've got the fiscal policy, the tax cuts that are supposed to accelerate the economy, all the deregulation that's supposed to be accelerating the economy. Then you have the monetary policy, which is tightening, and that's kind of the brake. And
Mm-hmm.
now this tariffs, well, that's another brake.
Yeah. So you said driving with the brakes. I'm thinking, is
Yeah.
that like sleeping with the television on? I'm not really so sure about that. The so let's before we get too far into it, let's set everything up, because I realize that this has been a topic that has been permeating the headlines, whether it's financial news or regular cable news or whatever print publication you want to read to. So unless you've been under a rock, right, you've probably heard something about these tariffs. But as you pointed out in the weekly wrap last week, it was really last Thursday when Trump talked about these potential tariffs on steel and aluminum imports, 25% tariff on imported steel and a 10% tariff on imported aluminum. Right. So that's kind of the basis. And then we had like a major freak out. And it seems as if there's been some more dueling back and forth. Right. The EU said, oh, we may not like this. Trump said, well, I'll fix you with your cars and
Oh my, the
different things. Right.
posturing. Yeah. The
Well,
EU's like, screw your Harley Davidson.
yeah. Well, the amazing thing about this is that, a lot of what Trump has had to say has been on Twitter. And I wrote a piece yesterday. It's up on tematica.research.com where I had a very smart suggestion to actually lift the tweets out, and we did do that. So it's all there, and I have another follow-up piece that I'm going to write. But before we kind of segue and go down, Lenore, talk to us about international trade.
Okay, so let's first, before we start talking about tariffs and if they're good or they're bad or how they affect, like, why do we even have international trade? So the way to kind of keep that a little simpler is think about, why does Idaho import oranges from Florida rather than growing them on its own?
Because they can't.
Exactly. Why does Florida get
Who
its
ever
potatoes
heard
from
of an
Idaho?
Idaho orange?
And why does Florida get its potatoes from Idaho? Same thing, right? So then taking that, going a little bit further, why does the US import most all of its coffee and its chocolate from nations that are in more tropical climates? Well, I mean, we could, yeah. You know what? Florida could get some really big refrigerators. It could grow potatoes. It could possibly do it, but it'd be really damn expensive, right? And the US imports coffee from tropical nations because it's cheaper, better quality than it is for us to produce it here. So that international trade really makes everyone better off. Those nations who either their geography, their skill set, natural resources, whatever, they can produce things cheaper, and the buyer benefits and the seller benefits.
So
Everybody kind of
I'm
wins.
just curious. You happen to use potatoes and you're in Ireland. Is there any way that you worked that country into this?
They are always on the mind when you're in Ireland. Like a
Interesting. You would
staple.
lead with potatoes, not Guinness, though.
Well, it is cocktail investing, so we'll get
Yes,
there.
yes. Okay, so what you're saying is, countries that have cheaper cost structures to manufacture or produce a certain good, they tend to be exporters of it. And countries or states or whatever the example is that has a higher cost of production, they tend to import.
Yeah, and then people get fussy. Countries will get fussy back and forth because maybe some country, China, is subsidizing an industry. And so it's
Hmm.
allowing an industry to actually operate. Like maybe you're having government intervention or something. You're mucking around with the system so that you're allowing an industry to sell something at below cost. And
Right.
then that really hurts everyone because other countries are struggling. It hurts the other producers of that product because
Well,
how
we
can they
have that
compete
here
with
too. We
somebody?
have this thing called Amtrak. We have this thing called the
Well,
Postal Service.
we also have farming
True.
and all the corn subsidies, right? So it's
Mm-hmm.
not like we don't do it. I mean, it's everyone does. You can see examples of this all over the place, but
Mm-hmm.
here this is a pretty interesting case. So particularly given all the talk about infrastructure, we're going to build our
Mm-hmm. Mm-hmm.
infrastructure. Good thing aluminum and steel aren't used in that, which
Well,
would make it more
the
expensive.
funny thing about that is when you really like I remember a while back I was doing something on corn and I took a look at all the different things that corn goes into, and it's amazing. But when you sit back and you do the same thing with steel and aluminum, I mean, there are some obvious things that are there.
Yeah,
Like planes are made out of aluminum, for example.
yeah,
Steel is used in cars and construction and stuff. Um, but it's just wild. So I mean, when you start thinking about like this Apple MacBook that I have here, primarily aluminum. You think about your
yeah.
iPhone, a lot of aluminum.
Yeah, and if we're going to talk about aluminum too, you kind of have to understand like how you make aluminum. So it is what aluminum requires to
Wait.
be
You're in Europe, right? Aluminium.
aluminium is aluminium. So aluminium for it to be produced, it requires a lot of energy. So the smelting of aluminum is it typically accounts for about 40% of the cost. So that means that aluminum smelters are typically built near very low cost sources of electrical energy. And
Hmm.
that's one reason that Canada produces so much because Canada's got a lot of hydropower.
Okay.
Okay, well, I know I was just getting that in there because that is it is kind of it's not like you
And
can just build it up anywhere. Now and given that what you end up with aluminum particularly is you've got really high economies of scale.
hmm
So countries, companies have incentives to keep building bigger, more efficient smelters using really low cost energy. So it is one of those things that you end. It's one of those industries where you really are rewarded by being very, very big.
economies of scale.
Exactly.
Okay. All right. So there's a lot of excess capacity coming out of Canada. Is that the message?
Well, it's not so much excess capacity, it's the different types. Like Canada tends to produce primary aluminum. There's two types of aluminum. There's primary and there's secondary. Now, primary aluminum is the original aluminum. Like secondary aluminum, that's produced from scrap. Well, it's the first round. Secondary aluminum is when you take scrap aluminum, like you take used cans, right?
Right.
Like those.
That's why we have those big blue bins that we are supposed to be good
Exactly.
citizens and recycle.
And the United States does a lot of that, whereas Canada does more of the primary. Now what's interesting is about 64% of all aluminum used in the US is actually imported. So it's not like a mass. I mean 64, it's over 50, but it's
Hmm.
not we're not talking like 100. And last year we imported 43% of that from Canada. So again, I mean we're really hitting Canada. Only 10% came from China.
What about? But there's also stuff that I've read too that we take some from Russia, we take some from the UAE, right? I know that
Just
I think,
small amounts.
yeah, I think just
Mostly Canada.
I think just skating back to that national defense issue, I think if I remember correctly, there's certain grades of aluminum that are used in uh, military aircraft. That there's only three sources. One is here at home, one is from the UAE, and one is from China.
Yeah,
So
there's
I think
all kinds of different types,
right,
exactly, and the same
right.
thing same goes for steel.
I was reading that the world is awash in steel, though.
Yeah, there is it. Well, that China did it again. Like China had all created all this steel production capacity, so you have a lot of excess steel out there.
Okay. Okay. So when we now that we have the primer on aluminum, the reality is that when we hear about these tariffs, there's certain industries that are going to be impacted. The normal ones that people tend to think about, we said a little bit earlier, but aircraft, high-speed rail. We could also take a look at use of construction in high-rise buildings and bridges, power lines and cable, motors, appliances, TVs, TV antennas. Who has an
Yeah,
antenna on their TV anymore?
yeah, exactly.
I
But
just,
what's interesting about that? So when we talk about steel and aluminum and these tariffs, now it's
mm-hmm,
fairly obvious that those who produce steel and aluminum would benefit. Now, if you look at
mm-hmm.
in the United States, the payrolls last January for steel and aluminum amounted to about 203,000 people were in steel and aluminum companies. Now, 6.5 million were employed in those industries that use the steel and aluminum, right? So
Right.
now if you're somebody who uses the aluminum, like well, do we have to mention the Campbell's soup situation?
Well, but it's a serious thing.
Right. No, cans,
Or
anything,
if
anything,
you want, knowing that you're in Ireland, why don't we go with cans of Guinness beer?
cans of Guinea beer, actually cars as well.
Mm-hmm.
So, for example, Ford has an aluminum truck. And
Mm-hmm.
given that China produces below cost aluminum that we're able to buy, Ford's able to sell its aluminum pickup truck at a savings of about $200 per truck to the final consumer.
And
Now, that consumer,
that doesn't sound like a lot, but that is a big deal to Ford.
it is a big deal to the consumer.
Yeah.
I mean, $200 is a decent amount. Now, all those American buyers of products that use aluminum, like trucks, now have more money in their pockets to buy other goods and services, right?
Mm-hmm.
So increasing the cost. I mean, one of the ways to really look at this tariff is you're just taking money from one part of the economy, from one group of people, and you're giving it to another. Because those employees, you'll have more people employed in steel companies and aluminum manufacturing companies. Those who use steel and aluminum are going to get hurt.
Right.
Right? So you're taking away from them, and then you're giving it to the steel. Now, one of the reasons that the market and the stock market is a little stressed out, and overall people are kind of confused about that, is that you have so many more are going to be hurt by this than are
Mm-hmm.
helped.
Mm-hmm.
Not
Well,
knocking that those that are going to be helped. Yeah, this is great for them. It's just a numbers game, right? If you've got
yes.
like 230,000 versus about roughly 6.5 million that are harmed, it's a bit of a head scratcher for this. And it's also a bit of a head scratcher in that this sector is becoming increasingly automated, right? So even without all this, your payrolls, that this is something that manufacturing in general, we're more and more trying to move towards lower cost production, which in
Mm-hmm.
a lot of
Mm-hmm.
cases means more and more automation. So it's strange to be focusing here rather than, say, focusing on something very high tech, more of a growth opportunity on a global basis.
Well,
It's a strange thing to do, and it's a
it,
strange thing to be attacking our closest allies.
yeah. So let me just put a little context and perspective, and let's talk about then the why or
Okay.
why not. Okay.
Okay.
So you were talking about various industries that would be affected, and I just want to rattle them off and give people some examples of companies
Okay.
that maybe they've looked to invest in or not. So the tariffs would be bad for, like we kind of said, airlines. Uh, Auto and truck manufacturing companies, engine companies, rail car manufacturers, heavy duty construction companies, in various consumer goods, whether that's, Coors, Budweiser, what have you. Other companies would be, just to match those up, Boeing, heavy truck manufacturers, Packard, Navistar, engine company, Cummins. You would mention some cars, so Ford, General Motors. On the rail car front, Trinity Industries, Greenbrier, American Rail Car, and of course, construction equipment companies, Caterpillar, Deere, and then various quote unquote consumer goods, Apple, Dell, Coca-Cola, Pepsi, for example. All of those different companies. And the ones who would benefit because the playing field is going to be leveled a little bit: U.S. Steel, AK Steel, Reliance Steel Aluminum, Kaiser Aluminum, and Arconic. And I have to admit, I never heard of Arconic before until today. So I guess to us, the big question is, will these go forward or not? And I'm going to postulate one theory, and you and I were talking about this last week, where I'm like, I don't know. To me, you look at where the economy is, you look at what the potential impacts are from a trade perspective, and we will talk about them when we game this out in a minute. But my gut reaction was, I think Trump was taking the same page from his Art of the Deal book that he has been using over this last year. Okay, so when we look at that, and if you read that book from 1987, there's a couple things that kind of jump out, right? Think big, maximize the options, use your leverage, get the word out. Imagine if there was Twitter back in 1987. Donald Trump would have been the most followed man. Fight back. That's exactly what he did on Twitter with the European Union, right? He's done it with other people as well. But this one part of it that it just crystallized it to me, which was have fun. And there's this direct quote: Money was never a big motivation for me, says Trump, except as a way to keep score. The real excitement is playing the game. And I think he really enjoys using this tactic, if you will, to negotiate with people.
I think you're right. I think you're absolutely onto something. But it's a very different way to go about international politics.
Yeah. Well, no,
like, we'll put it that way.
Here's the thing. It is perfectly fine if you want to keep your opponent, just to use that word, off balance the whole time.
Exactly.
If you're doing it in the company that you own, totally fine. This is
Absolutely.
a little different, though.
Yeah, this is a little different, and it's a little like his tweets that trade wars are good and easy to win has everybody kind of scratching their heads, because that's just a very strange.
How many people have we heard from his economic advisors and the others who are coming out and be like, yeah, this is not a good idea. This is not going to end well, right? I mean, even like
his own advisors.
Art Laffer was coming out, who was one of his economic, architects, is like, this is not going to end well. And I heard him say this on Bloomberg Radio. So, again, I think this is all part of the Trump plan to just keep, you don't know what's coming.
Yeah. But that is, I can see from his perspective he's following his own playbook.
Yeah, that's exactly right.
But the challenge is that on the receiving end, like, the rest of the world, it's making companies nervous, right? Because, for example, your manufacturing company who uses aluminum and steel.
Mm-hmm.
Now, you've been preparing to expand. Perhaps you've been bringing on more employees. You've been looking at building out your facilities because, hey, deregulation has been great. Rolling back taxes has been great. And you've got this guy telling you that the war on business is over. I am pro-business and I want to help you expand. And I'm a big fan of the manufacturing sector, right? So you've been hearing that the guy in the White House loves the manufacturing sector. And everybody's like,
he's got my back, man.
He's got my back. So you start planning and you're getting all excited and you're starting to really plan on expanding. And now, wait, what the hell? You're going to increase my costs like substantially too. I mean, this is not a minor thing.
I totally hear what you're saying on that, but I just got to say,
we're already getting nervous about rising prices and inflation.
Totally agree. And we'll get to that in a split second. But I think from Trump's perspective, it's not his fault. I'm just trying to do what I can. They won't negotiate with me to do a better job for you. I bet you any amount of money, that's what he's thinking.
Yeah, I think you're probably right. You're probably right. But at the end of the day, I think this is the challenge, is that there's Trump, the person, and his style and his techniques. And then there is, the U.S. economy and the global economy.
Mm-hmm.
And it makes it very difficult. And I think the real challenge here is this is the first like really, really big, high profile hit to business that they've taken from Trump. Potential. It's not actually a hit. It's a
threat.
It's a threat of a hit,
Mm-hmm.
and it's got to have a lot of the manufacturing sector, which is supposed to be his sweet spot, kind of scratching their heads, going, "Uh-oh."
Well, you mentioned it earlier. There's the manufacturing sector. There's this whole bid, remember, to rebuild aging U.S. infrastructure, right? And this really throws a potential wrinkle in that.
Yeah, we're going to make it more expensive for us to do that.
Well, let's talk about that, because you said a couple times that things are getting more expensive, and I think if we just game it through, I think we can help people understand what may happen, what it means for the market, what it means for stocks, profits, and all that other stuff, the economy, the dollar, because this is all stuff that I think people need to know if it happens. I don't think it's going to happen. I could be wrong, but let's do our job and prepare the listener. What do you say? Okay.
All right.
So Trump instills these tariffs, and it means that higher prices are going to be slapped on them, the tariffs. So company profits are going to get hit if they're buying imported steel, imported aluminum, as you like to call it, right?
Well, and that money that has been, all that money that we're talking about, going to come back into the U.S. because of the changes in the tax code.
Why would it come here?
Well, exactly. When coming here, when the theory was it was going to come here and it was going to build up capacity, except for that capacity probably involves purchasing steel, and the price of steel and aluminum is involved in it somewhere. Right. Now that just became more expensive. So that is foot on the brake, foot on the accelerator.
Yeah. Well, I mean, think of it this way. If you're Volkswagen, say, and you're committing to building a new plant in the US, you have your global suppliers for steel, aluminum, whether it's to build the building that you'll be in or,
Right
to
doing that.
manufacture the line or whatever it
Yep.
is. This is a total disruption now.
Well,
So,
Electrolux just announced that after this, Electrolux announced that they are putting on hold plans to spend about 250 million to upgrade a plant in Tennessee. So there you
yeah,
go.
yeah, absolutely right. So in the so if it happens in the short term, prices on imports go higher, company profits get hit. What are you going to do? Right? You're going to try and pivot and find a lower cost supplier. But what have we been talking about for a long time? Right? A dearth, like that SAT word, a dearth of qualified workers. And what we've seen too is the idling of like steel mill capacity inside the US because we import more than we manufacture. So the question that I'm kind of like, wrestling with is what is the time to bring that capacity back online, grow that capacity, and do we even have the number of qualified workers to do it? What say you, Lenore Hawkins?
That and particularly, I mean, the manufacturing sector has been one that's really been complaining about a lack of skilled workers,
Yeah.
and it's not like steel and aluminum, like these
You
kinds
can't
of.
flip burgers and go make steel. I'm sorry.
Yeah, it's not obvious, and it's not that these have been areas that have been obvious growth areas for employment
Yeah.
in the U.S. so that people were really working to get into these areas.
No.
Yeah, it's complicated. It affects a lot more than just the immediate sectors.
Absolutely. So let's go there, right? So I'm this company and I have a choice. I can import and pay more, or I can turn around and buy domestically, but there's not enough supply. So what are the suppliers going to do to me? They're gonna fleece me, right? They're gonna
Yep.
raise prices because they're capacity constrained. They know they can. I sound like Jerry Seinfeld.
And
They
that
can.
means higher prices to the consumer who, well, you just got that tax cut and oh, now that tax cut is going to get hit. I mean, you
Yeah.
got a little bit more money in your pocket, but it's going to cost more.
Right. Absolutely. And we're
Buy that
seeing
can of soup, to buy that car, to buy that
I
iPad
might
or
have
that
to
Mac.
buy soup because I can't buy that car. The
Mhm.
but we're seeing these types of capacity constraints play out in a couple of different industries right now. You can look at the heavy truck industry. There's a national shortage of trucks, and you can see soaring freight costs. We talked about that on the podcast a
Yep.
couple of weeks ago. There's also a shortage in lumber. And as we go into the busiest time of the year for the home builders, there's a lot of talk about the impact on home prices going higher. I think I read somewhere that what
Well,
was
we
it?
already put a tariff on the lumber imported from
From
Canada.
Canada.
So,
That's right. That's exactly right. And we're seeing this kind of flow through. And I just saw something. It said that
and that's not exactly helping making homes affordable.
no, absolutely. It's if anything, it's going to price more people out of the market. Oh, here it is. Here it is. So March dated lumber futures at the Chicago Merc hit a record of $532.60 per thousand board of feet last week. That's up 50% in 14 months.
Yeah.
It's unbelievable. So the windup is that companies are going to be saddled with rising costs. And when they have rising costs, Lenore, what do they do to the consumer or the buyer?
Raise prices.
They
Well,
raise the
they're going to try to raise prices now. I mean, because
Mhm.
that's what you do if your costs go up, and you owe it to kind of to your shareholders. You want to stay in business. You're going to have to raise prices, but they may not be able to raise prices that much because we've seen a lot of pricing pressure from the consumer, and the consumer doesn't have a whole lot of extra cash, right? Because what we've been seeing is spending has been growing faster than incomes.
Mhm.
So they can try to raise prices, but let's see how much they can. Now, if they can't raise prices, then that's harmful for their employees, right? And their shareholders. So it's somebody's going to pay, right? It's not like, oh, put these tariffs on, increase the cost
Oh,
of
yeah, yeah, yeah.
materials and everybody benefits. Like there's no question that it's taking away from one part of the economy and giving it to another.
Right, right. Okay, and we'll talk in a little bit about a quick signal later on about the consumer because I think there's a little more reason to be worried about the consumer. But I think your point is, if the consumer is able to pay, they might be able to raise prices. But what happens if the consumer is tapped out and can't pay? It's a great
Exactly.
point. It's a great point. Great point.
And what we've seen with credit cards.
Oh, that's don't steal. Don't.
I get so excited. I can't help it.
I know. So higher prices impacting the consumer from a global macro perspective. What does something like this mean for the dollar?
That's where it gets very complicated here, because part of all of this is that Trump doesn't like us having a trade imbalance, right?
Correct.
He doesn't, and when you have a trade imbalance, what that
Oh,
means
he
is
was he was he was blaming what did he said something the other day about I can't believe all these past presidents. Oh, they did such a terrible job allowing this to happen.
yeah, so don't like a trade deficit, right? He really hates having a trade deficit. So, and that means that we buy more from the rest of the world than we sell to the rest of the world, right? Except if you're going to be the global reserve currency, you kind of have to have that, because as the world grows, the demand for dollars, because it is the global reserve currency, and it's what oil's priced in it. Like all kinds of commodities are priced in dollars. So you need dollars out there. Now, as the world grows, as the economy outside of the US grows, the need for dollars is going to grow as well. So that
Okay.
you just need to have that happen. And in fact, actually, I mean, sorry to say, but when we've had large trade deficits, that is correlated with the economy growing at above average rate.
Okay.
And
Okay.
now what that is, now I'm saying correlated. I'm not saying causation, I'm saying correlated. Because the stronger the US economy is, the healthier the US consumer is, the more stuff they want to buy.
Absolutely.
And
And they
that
tend to buy stuff from outside the US.
because we can buy a lot of products outside the US for less than we can manufacture them
Oh,
here.
absolutely. And, it's funny. You said that earlier, but only just now am I thinking about this. I saw a tweet that I thought was phenomenal, right? Why do we have, trade like this? Because people want to buy cheap TVs, cheap toys, cheap clothes at places like Walmart and the like, because that's what they can
Well, there
afford.
you can get outside the US. Like we said, why do you buy coffee that's not grown in America? Why do you buy coffee
Right, right.
beans that aren't from the US? Well, because other places can do a better job.
Yep.
They can do better for less money. So, good luck having everything that we as Americans consume being manufactured, grown, what have you, in the United States. You're not going to get the best of all quality, right? Or the you're not going to get the best coffee. You're not going to
No,
get the
no, no.
best pineapples and
Have you had
bananas.
that coffee from New Mexico? It's great.
If everything that we consume has to be from the US, well that's, you're just not going to get very good stuff.
Well, I also think
But
too.
it is complicated. Like, I do appreciate that it isn't that straightforward, and we don't want other nations taking advantage of us by subsidizing. And that's kind of his problem with China, is that it looks like the Chinese government is helping subsidize
Mhm, mhm.
these manufacturers so that they can sell on the global market for below cost. And I understand that nobody likes that. That's kind of cheating. But only 10% is coming from China. Like,
Right.
who are we hurting? We're hurting freaking Canada. I mean, last
True.
time I checked, they weren't exactly a nation that we were, at war with.
Do they even have an army in Canada?
They have some really nice Mounties.
I'm gonna leave that
Guys
there.
on guys on
I'm
moose.
not sure what that means, but okay, that's
Guys
fine.
on moose. The Canadian
Guys on
Mountie.
moose and squirrel. The okay. So if that's the case for the dollar, then what do these types of trade disruptions mean for the global economy?
Well, this is, what's going to happen. What kind of retaliations are we going to see? Are we,
That's the
we
big
already
question,
saw
right?
exactly. We saw that Europe was saying, okay, on your Harley Davidsons,
Right.
right? I mean, and that's, you know, I appreciate you don't want other guys cheating. I get that. But we have to kind of look at where we are right now, because it's where the trade balances are today. Because forcing a move off of that
Mhm.
affects people, right? And I
Right.
can see, like, other countries that we have had historically great relationships with, and now we're launching this, hey, you're unfair, we don't like you, which is sort of out of left field. Like, Canada's going, wait, what? I mean, you already hit us with timber, and now you're going to hit us with steel and lumber, and that's after NAFTA. And then think about the fact that NAFTA has created just unbelievably tightly integrated production lines.
Yep. Absolutely
Okay,
true.
and maybe we don't like that. Maybe, okay, he doesn't like it. He doesn't think that's fair. Oh, okay, and maybe he's, for argument's sake, let's say he's totally right that it's not fair. But if you're going to change it all, you're going to affect American companies that have created production lines that are tightly interwoven with Mexico and Canada, and they have invested heavily in these. And if you go changing all the rules of the game, that is going to affect their economics, and that is not in a good way.
No, no, it led to it's if we gamed it out, it's going to drive some of the things we were talking about earlier about higher prices.
Yeah.
And I think those higher prices means, at least given where we are in the current economy, it means cash-strapped consumers are going to have less to spend. It
Yep.
means they won't be
Because the
buying
stuff
as
you want to buy
much.
is going to cost more.
Right. So it's going to be a huge headwind to the U.S. economy, at least for a period of time, maybe until we're able to get that capacity level up and get people to buy America.
Exactly.
But that's not months. That's probably not even a year. That is a
No.
protracted period of time.
And that coming at a time where we're in the late stages of the business cycle.
Yes. Yes.
Let's not forget that.
No, no, no. I can't forget that. You say it every week.
I do. I really do. It's so important to me.
Right. Well, it's true though. It's true. So just to recap, so the European Union is talking about something like 3.5 billion in retaliation from U.S. goods, anything
Yeah.
from t-shirts and God forbid whiskey to motorcycles and ladders and all this other stuff, jeans, cosmetics, motorbikes, pleasure boats, orange juice, and other
Perfect.
things. So between the whiskey and the orange juice, I'm in trouble. So I don't know about you. But anyway. So to me, the question is, does it all happen? And I think that the Fed, who's got a meeting coming up in 2 or 3 weeks, has got to be sitting there going, Jerome Powell, hey, I gave one speech and I was probably a little too hard. And then, as you pointed out in the weekly wrap, he talked to the Senate. He kind of backed down a little bit,
Yeah.
right? Yeah. Not so bad. And now he's sitting there going like, what the heck?
Oh my God, the poor guy. Like Jerome Powell, his first day on the job, the Dow has the single biggest point drop in its history. So, welcome. Then he gives his first testimony, his first Humphrey Hawkins testimony in front of Congress. And the day one, market's like, oh, hell no. And things just start tanking down. So the next day he starts to try and step it back a little bit. Like, calm down.
Right.
We're not going to get crazy here. Calm down. And the market's listening, going, oh, maybe he's not so bad. Like, we didn't start off really on a great note, but maybe this Powell fellow is not so bad, right? The market starts ticking up. And then wouldn't you know it, right in the middle of all that, Trump goes, tariffs. And the market goes, boom.
I know. It's just,
give the guy a break.
I feel bad for him. But I mean, how would you like to be the Fed, who's getting ready for their next monetary policy meeting? Jerome Powell's coming out, first press release Q&A, the first updated dot plot on his watch, and he's got to go, what? I got to forecast what?
Yeah.
Given what's going on, whether it's the economic forecast, inflation. I mean, talk about being thrown a curveball. I mean, that's just, I honestly feel bad for the guy.
And this isn't the first time that we've tried to do this.
No, it's, I think I heard something like I was saying on Bloomberg Radio, they were talking about it and they're like, yeah, this has never worked for us.
No. Back in March of 2002, George W. Bush, he imposed some tariffs and quotas on a whole range of steel imports. It went so well that by late 2003, they reversed all of it. Wait, never mind.
So wait a minute. Hashtag sarcasm.
Yeah, hashtag. Oops. So, and according to a report, 2003 report from the Trade Partnerships Worldwide, the tariffs were estimated to have led to the loss of around 200,000 jobs in steel-consuming industries versus the total 187,000 employed in the steel sector. And that was, I mean, just that's all that's employed, right? So you didn't
Right.
really have a huge positive impact there that could counteract the loss of 200,000 jobs. We've done this, and that's not the first time, and we've done this. It doesn't seem to work out for us.
No, but as you're rattling those numbers off, I'm thinking, wow, and we have a lot of companies that are giving raises to people just as this turns around and happens. My double whammy to my cost structure. It's
Yeah, and
that's
you didn't
just
see it coming.
no. So you certainly didn't see this coming. You saw the
Right.
benefits of tax reform coming, and companies
Yeah,
are
no,
still trying to
we talked
figure
about
all
that
that
last
out. That's all good.
Yeah.
But what?
Yeah, wait,
So
what?
that's going to be tough. So what do you think? I mean, if you were to really sit back and think about this, do you think he's going to do it? Because I don't. I would say I am like 90% convinced that he's not going to do it. I'd be shocked.
I think it's going to be very difficult given that he really doesn't have that much support from his own party.
Right.
And his own party is facing elections in November.
Mm-hmm.
And it's not going to go well if people are going, well, wait, the Republicans really want to, in the November elections, they want to be bragging about how much better the economy is after tax reform.
How much of this do you think is Trump going? I'm a year in. I've recently announced the head of my reelection committee, and I've got to think about ticking down all those items that I campaigned about, right? Going to reform healthcare. First day, didn't happen. Infrastructure, announced it, waiting to see what happens. Tax
Mexico will pay
reform.
for the wall.
Right. Mexico, pay for the wall. Tax reform, we got it. But he also said when he was campaigning in places like Pennsylvania, Ohio, right, where manufacturing has been hard hit, he said that he is going to address the trade imbalance. And now he's going down that path. So I wonder if he almost has to go through the fight in his own mind.
Yeah, he might have to in his own mind, but it is such a mixed bag, right? Because it helps one part of manufacturing and harms another. So it's not straightforward that it's good for manufacturing, period, the whole sector.
Yeah, I like I said, I keep coming back to, yeah, I don't think so.
Yeah,
I just don't think it's going to happen. I
I
could
think
be
the
wrong.
Republicans so desperately need to be able to, because it's tradition that
Mhm.
when you have an election cycle with the presidency up for grabs, and if you get a sweep where the House, Senate, presidency all go to one party, the next election 2 years later they lose something.
Mhm, mhm.
Right? I mean, that's just what happens, and the Republicans are definitely gonna be trying to have that not happen, and it will be more difficult for them if people are going, "Wait a minute, my stuff costs more.
Oh,
Yeah,
yeah.
I got a tax break, except for now my stuff's costing more." And
Just remember what Bill Clinton said. It's the economy, stupid.
economy stupid.
It's the economy, stupid. All right, so let's talk about the market. The market has been a little, the initial reaction was like, whoa, as you alluded to earlier, that it had that big sell-off immediately upon Trump, opening his yap and talking about trade tariffs.
Getting
And
those
then
Twitter fingers flying.
man, oh man. And then the next day, the market opened up, fell, and then kind of came back a little bit, had some sanity check over the weekend. And then it's kind of been topsy turvy a little bit again this week. So
Yeah,
I think,
Monday it totally seemed to shrug it all off, which kind of I think what may be happening there is hearing from a lot of the other Republicans over the weekend, the market's like, yeah, no, it's not happening.
he doesn't
I think,
really mean it.
or
But
he's
it's
just not going to be able to really do it. Like he politically was not going to be able to pull it off.
I think you're right. I think people are wisening up, if that's language that's correct. But I also wonder what it's going to mean though, because like we were talking about earlier, we and I think other people they're catching on to his tactics. Do you know what I mean? So,
Yeah.
I wonder what that's going to mean. But it is interesting about the market kind of shrugging it off. I continue to think though that we will be trading data point to data point over the next 2 weeks or so until Jerome Powell opens his mouth at the at Fed FOMC meeting and says, this is what's going to happen. This is what we think. And of course, it's going to be as clear as, as I like to say, mud, which means we're going to have to put our thinking caps on and, help people understand what's being said and what is likely. But I'm sure.
Fantastically clear Fed speak.
Correct. Okay. So do you agree with me that he's probably not going to do this?
I think I just don't think he's gonna be able to pull it off.
Do you think he carries out the talk for a little while longer? Because he's got like 10 days to go.
I think he does, and I think he's pretty good at throwing things out there and then being able to walk it back without looking like he's actually walking it back.
So I talked to our silent man at Tematica Research, Chris Broussard, about
Yeah.
that. And he said he had this great line about this, which I think is so appropriate here. He goes, Trump is the master of these are not the droids you're looking for.
Completely. Oh, that's genius. That's exactly it. That's so true.
Well, it is amazing how he can roll topics off, and it's like
Yeah.
it's just gone. It's
Yeah.
fascinating. So we'll see. But anyway, let's get to some other quick hits here because we kind of took up a lot of time. But the world of thematic investing is great because there's all sorts of signals that we see day in day out for our investment themes and our thematic tailwinds. And I'm sure people were taking a look at Amazon making some news that they're exploring checking accounts with J.P. Morgan as well as Capital One. They probably saw Kohl's is partnering with German grocer Aldi to bring groceries into its stores, potentially trying to tackle the cash-strapped consumer a little bit better and bring them back to the store with greater frequency. But here are two that I think we wanted to talk about before we get out of here today. So, Lenore, this is the one we were kind of talking about or alluding to earlier with cash-strapped consumers and debt. Apparently, missed payments on credit cards at small banks have risen sharply over the past year. A sign that cardholders, as you might imagine, are taking on probably a little more debt than they can handle. And as a result, their charge-off rates have been climbing. So according to some Federal Reserve data, in the fourth quarter, they hit 7.2%, up from 4.5% fourth quarter 2016. What say you?
This is really, I think, this is one of those canaries in the coal mine. Because you think about the small banks, right? Like how are small banks going to get customers, right? The small banks to mail out stuff, it's fairly expensive, right? To attract, Chase, JP Morgan, Wells, Bank of America. I mean, everybody knows them. So it's a bit easier for them to attract customers because they're just so well known. Small guys kind of have to push the envelope and get out there a little bit.
Right.
Now, these guys are to try and get customers. They're going to have to take people that maybe are a little riskier.
Oh yeah, yeah.
Right? They're going to be a little.
Their credit scores may not be the best.
Exactly, may not be pristine. So if we see, and what you and I have talked a lot about,
they may not be pristine.
It may be pristine, and you and I have talked a lot about how when you look at the aggregate data on like income growth, it's really misleading.
I'm sorry, what income growth?
Yeah, exactly. If you look at the data for the we keep talking about the non-supervisory production employees, which is like the 82% of the country. Mm-hmm. Last year, income growth was all of 0.7%. So when we add everybody together, the data gets a little skewed because we really have this bifurcation where the rich are getting richer. Their incomes have been growing faster than kind of the average American household. The average American household, they didn't have a whole lot of assets to start with. They're not enjoying what's happened with the stock market because they didn't have, if any, hardly anything invested in the stock market, right? So their picture in the economy, their experience is very different than what the kind of upper levels of income and net worth have been experiencing. So when I look at these small banks and think, well, who are they catering to? That is telling me that we've got, once again, shocker, we're starting to see signs that there's problems with debt.
But I don't understand. I go to my mailbox. I get all these credit card applications. Capital One. Hey, we want to do this. And the funny thing is too, even like the cards that I do have, and I have American Express and I have another credit card, personal, and then one for business. And it's like out of nowhere, they're like, "We want to give you more credit," and I'm like, "I don't want any more."
Yeah, talk about signs of, shall I say it again, late stage economy.
I know, it's just like, well, it's almost like, it's Christmas time when all those Pottery Barn catalogs start showing up.
Yeah, very much. And I remember back in 2006, It was like 2000, 2006, 2000, late, early 7, when I was getting, from my home, I was getting all these offers for an insane amount of money that they would give me on a home equity line.
Oh
I
yeah,
mean, they were
yeah.
offering to give me more on my home equity line than I actually had equity in the house. It's like, oh, this is not a good sign. This is bad.
So the windup is that we're seeing this rise in small bank charge-offs as a warning sign that's rather confirming for our cash-strapped consumer, right?
Exactly.
And this could be one of those signs that says consumers may not be able to spend, and it could be a headwind for the overall economy, right? That's what we're saying.
Yep.
Okay. All right. So let me deal with this other one. This one falls under our safety and security investing theme, and this was an article out of the Wall Street Journal. I think we should, in the notes to the podcast, when we do stuff like this, we should actually list the stories out with links. What do you think?
Yeah, that's good.
Yeah, I think we should do that. Broussard's going to kill me. Anyway, so safety and security. Sorry. So apparently, there's this article talking about how companies, as they're looking to take over other companies, acquire them, that cyber due diligence is a increasing focus. And security problems, the head of ADP's chief security officer, Roland Cloutier, he said security problems could kill any deal. I guess they were looking at acquiring a company called Workmart, and what they said is that they didn't see any problems, but a deep study of a target's cybersecurity helps executives, forecast deal costs. And I was just thinking about this, like, didn't Verizon successfully renegotiate the price down when they bought Yahoo?
Yep.
So I'm just thinking, we tend to think about safety and security when people get hacked, right? That's more reactive, but this seems to be shifting more into a, get under the covers, do your due diligence, which, in a different aspect of your life, you do a lot of.
Yep. There's liabilities you might not know about.
That's good. So just another angle that, the positive of the connected society give way to the pains potentially of safety and security.
Yep. And I have one more to throw at you. Just an interesting data point.
Is this a good airport story?
No. This is last week we were talking about, I think it was last week, or maybe the week before, we were talking about movie production, and that China, within the next 5 years, China was expected to become have the largest audience, be the biggest market for movies. I was very interested to read today that China actually now manufactures more cars than anywhere else in the world.
Well, they got more people than anywhere in the world.
Exactly. It's one more signal of the rise of the middle class, that you've got these emerging economies, particularly you've got China, that are not only there. You have a whole new market, right? That we didn't really even 20 years ago. This was just not something you really thought about.
Oh no.
It was not something that consumer products companies thought about. It was sure as hell not something that Disney thought about it when Disney was planning out their movie releases over the next 5 years. Now it very much is, but it also is something that's going to change the face of global consumer products, because global consumer products have been very Western culture focused.
Yes.
And as you see this rise of the middle class in these emerging markets like China and India, that's going to shift.
I don't disagree with that, but I will tell you right now that if the Hershey company thinks that they can import chicken feet and I'm going to eat them, they are crazy.
Not happening.
Crazy. That is not going to happen. And I will admit that I have tried those Cricket protein bars. You know what they taste like?
You did?
Oh, I did. You know what they taste like? I'll tell you what they taste like. You ready? You ever been like running or biking and you get like a mouthful of gnats? That's what they taste like.
Yeah, there's not enough Guinness in Dublin to get me to taste a cricket. just for the record.
All right. So that brings us to the end of a somewhat lengthy podcast. But like we always do, we like to go in depth and deep in our analysis. So hopefully that's fine. And we'll be back next week. I guess the question is, where will you be next week, Lenore?
You just never know.
All right. We will catch you all next week. Thanks for tuning in.